Mortgage interest rates have just enjoyed their longest winning streak in 2 years, only beaten by the global pandemic. And the biggest drop in my lifetime in that time period. Is that in the news? I don't see it. It certainly hasn't got the attention it deserves to, but I'm paying attention to it. And I think it's very significant to predict the future of the real estate market. I'm Bill Gross, the LA probate expert. This is my weekly real estate update. If you follow me, you know that I watch the news and look for data rather than just emotions that get people excited. And if you watch the data, I believe it will show you the real estate market is much healthier than we're being told. It might be the overall economy is facing recession, but the real estate market is nowhere near a housing crash and is really experiencing perhaps some makeup for the hot market for the last 2 years. Let's take a look at the data. So one of the things I looked at was the mortgage rates, and you can take a look at them here and see the tremendous drop, only rivaled by the drop previously during the pandemic period. You can go back in time and never see that until 1980, to see an equivalent drop period. You have to go back in time probably 10 years to see as fast and significant a drop as we've seen here just in the last 6 weeks. And again, we've had 6 straight weeks of improved mortgage rates. So it's an important factor because it wasn't just that rates were high, but the fear that they would continue to go high and not stop that was the problem and driving people to be worried about the market. Now, one of the things I like to do is look at the actual data. Last week, one of the most quoted and most well-known economists in real estate, Lawrence Yun of the National Association of Realtors, released their market survey. And I had a chance to go on that program and look at the data in detail. I want to share with you what I think are some really significant factors that maybe he didn't discuss in the detail that it deserves. Let's take a look at it. First chart he has, annual existing home sales down 16%. Sounds dramatic. And it is dramatic. However, take a look at the fact that these last 2 years were so much higher than the prior years. It's no different than in other parts of the economy where people buy a bunch of cars with incentives and then don't buy the next year or two because they've already bought them. People who were otherwise thinking of selling maybe or buying a year or two down the road did so during the pandemic. And now those people have already bought or sold. So it's understandable that the market has dropped off, but you can see it's still in the range of the prior years. And this graph is very misleading. Instead of going to 0, they start the graph at 3 million, so it exaggerates the differences here. If you took this range down to 0, the differences will look to be about half of what they are. So this graph is really designed both to scare you and leaves out the important factor, which is we probably bought a lot of houses in 2020 and 21 that would have been bought in 2022, but for the pandemic, people decided to do it earlier. Okay, so the next graph, he goes into existing monthly home sales, and he shows this tremendous drop. And it is a significant drop. But again, notice the graph now goes to 3.5 million, again, to more exaggerate the numbers and then more exaggerate the differences, because if it went down to 0, it wouldn't show as dramatic a change. More importantly, again, notice how many sales we had in 2020, 2021, more than 2019. Might those sales, if applied to 2022 and 23, keep us in a pretty good spot? And I think yes. I think all we did was encourage people to buy houses earlier in the pandemic because they had nothing else to do. They were home, they're locked in, they appreciate homes more in that circumstance than they otherwise might have. The next important statistic I think that he talked about, a couple of them I think were not important, but one of the most important ones was mortgage delinquencies. And notice how during the COVID period, we had tremendous lockdown, we had tremendous delinquencies, but it's come back down to near historic normal levels. Here's 2006 and 7, the run-up of the housing crisis and the drop-off. Other than that period, the current numbers are back to about where we were pre-COVID, about to where we were pre-housing crash. We would call these normal numbers. So delinquencies, defined as people who are 90 days or later on their home mortgage, those numbers are at normal levels despite the drop in sales. Take a look at distressed home sales. If you follow the real estate news, you've heard a story about a coming wave of foreclosures. Meanwhile, here we are into that. I've heard those stories for 2-3 years now. And here we are, very few distressed sales, meaning people who are selling short sales or foreclosure sales. Very, very few. So again, if we were looking at a housing crisis, we would expect to see those numbers ballooning. And why are we not seeing those numbers ballooning? Because with the increase in value of houses, the equity homeowners have is higher than the mortgage debt. It's growing faster. And the more equity people have, the less they need to sell a house. They can choose to simply not sell when they don't want to. And so what's happened is, while it's true with inflation, rates have gone up, it's also true that the value of properties went up. And because those houses are worth more, the sellers are in a better position than they otherwise would have been. So then we get down to the bottom line. What's he projecting for the actual increase in sales prices over the next period of time? So it's interesting, in his assessment, he forecasts out the next few quarters, and you can see he shows in red the forecast, 2023, a slight increase, second quarter, a drop, and then back to increases in 2023. And he actually projects 2024 to go up by 5% per year, which is higher than the average. The average increase in housing prices over the last 30, 40 years is about 2 to 3%. So really, 2023, he's projecting to be about zero when it's all done, or break even, and 2024 to go up in value. In fact, there's the number right here. 2022, home prices went up 9.6%. 2023, he's projecting zero. 2024, he's projecting up by 5%. And so at the end of the day, when you look at all the numbers, the underlying factors of the housing market, the lack of delinquencies, the increase in equity that people have, and now we have the mortgage rates dropping quickly. Now, I don't know if they're going to continue to go down or not. Hard to say. I don't have a crystal ball, or actually I have a crystal ball, but it doesn't tell you anything. But what I want to say to you is, based on the numbers we have now, the housing market seems to be correcting for the increased sales the last 2 years, and we seem to be returning slowly back to a more normal market. So what do? Well, if it's a good time for you to buy, great chance to buy. Lock in a rate, get a great rate now below 6% or right at 6% that wasn't possible a few months ago. And if you want to sell, it might be a great time to upsize, downside, or move out of state. There still are active buyers. I have buyers offering on every listing I have. There is no listing I have that haven't had some activity and buyers looking at it or making offers or going in escrow. So if I can help you, reach out to me. Call me, text me, email me. I'm Bill Gross, thelaprobateexpert.com. And as always, make today your best day ever. Thanks.